do all roads lead to hyperinflation or deflation? What is our economy heading towards? Let's talk about that right now. A lot of people are, guessing or just maybe speculating that we could be leading to hyperinflation or essentially just more inflation. And that inflation is not going to go down to that 2% goal that the Federal Reserve has, but it's just going to continue compounding.
Or getting worse, because hyperinflation is worse technically, right?
Yeah. Hyperinflation is definitely worse. I want to talk about what is hyperinflation, deflation, and why it makes more sense that our government is leading to hyperinflation instead of deflation. Because you're probably wondering, how does that even make sense? How does that affect me as an average person? Well, let me show you. This is a big reason why. So this chart right here shows by 2054. So how many years is that from now? Like 30 years from now?
Yeah.
So 30 years from now, I would be 56 years old. So hopefully retired.
I'll be 60.
So
62, yeah.
So we'll be a little older. We'll be closer to
I think I'll still be
parents'
good.
age.
I see people at 60.
Oh, yeah.
Good. Yeah.
Yeah. We won't be in
I
cranes or anything.
continue working out.
Yeah, well, we'll be just fine, but our economy won't be just fine as the way it's headed. The way it's headed by 2054, this is super interesting. The interest cost alone on our debt, okay? And the way that the government has debts is for many reasons. Money owed to different countries on the bonds. So people buy government bonds and the government owes them what they initially invested plus the interest. So the interest alone on the debt from the U.S. government is going to triple all our R&D, research and development, infrastructure, and education. It's going to triple that spending by 2054.
So this is kind of like their credit card, their bank account. It's going to double their spending.
Triple their spending.
Triple.
The interest cost alone on those three things. I mean, the interest alone this year is already going to be more than our defense spending.
Yeah, I have this chart here for the first time, If you see here, this chart here on the screen, the black is our defense spending that we usually do. And since 1885, our interest is almost close to each other. But now we're at the point that it looks like a meme stock where it's just going up and up and up. And it doesn't seem like it's slowing. And then here's another chart where, for 221 years, it took the United States to reach $12 trillion in their new debt. And in the last 5 years, we did that alone, 12 trillion. So we're definitely like compounding, compound interest. That's literally what's happening,
So now let's talk about it. So obviously you guys know, after seeing those charts and seeing what we explained, that essentially the government owes a lot of debt. And at the end of the day, even though the government says it's for us, at the end of the day, there's other things that they probably put before the interest of the people is... And it's understandable, their debts as a country, because our country, we don't want to go bankrupt. We don't want to go in a position where,
weak.
It's very bad for us on so many aspects, that the dollar loses all that value. And then, basically it's not a good place to be. So what is deflation versus hyperinflation? So I'm going to give you guys two scenarios. So in the first scenario, let's talk about hyperinflation. So let's just say that over the next 10 years, we experience hyperinflation of 50%. Okay, 50% over the next 10 years. Because the government's like, we got to print a lot of money. So there's a large supply and it just, hyperinflation. Everything, you think grocery bills are expensive now? Just wait 10 years from now. 50% means that something that costs at $10, basically is now 15. It could happen overnight. It could happen over a couple of years.
We've seen that the last 4 years.
Yeah, technically, yeah. A lot of people have speculated that we've already experienced hyperinflation. So in that scenario, let's say we experience a 50% hyperinflation and you make $100,000 a year. Now, in nominal income terms, based on how much the inflation is and just like the actual income, you're technically now making $150,000, which is good. Because if you own a house and your mortgage, let's just say, was based off your $100,000 salary, and now you're making technically $150,000 because hyperinflation and your nominal income, your mortgage hopefully is fixed and it's not a variable interest rate or nothing like that. It's a fixed interest rate. So that means you technically are in a better position because of your mortgage is fixed, but your income technically went up since the cost of everything went up. So in those cases, hyperinflation can be more likely. It can benefit those that have fixed debt and that have assets. Because let's just say you have your car, you have your house, it's all fixed, but your income went up because of hyperinflation, then you wouldn't really mind it as much because you're paying the same amount for your house, but you're making technically more.
Yeah, but that's a small, circle of people or amount of people that actually own assets, like have we seen, At first, we got stimulus checks and a lot of people spent. But the people that benefited from all this money printing were the ones that were business owners or the people who own property already, like your car went up in value.
Yeah, and not the average business owners. We're talking about corporations. We're not talking.
Guys.
Not talking like the corner business. A lot of them didn't even apply for those loans.
Yeah. So the way that you benefit, if you believe like what he's saying, Josh, is how could I prepare myself? And that's why we always speak here in Avanza Latino is get out of debt, get out of credit card debt and invest in assets, even as small as a little bit every month. But that just builds a habit because if this is true, what he is saying, the best way you can leave your money in your bank account. But that money, if it's true that we're going to go to a hyperinflation where they're just going to print even more to get out of our debts, then that money that's sitting even in your shoebox or wherever, if it's not growing every year, it's actually losing its value as the bubble gets bigger and bigger. And we see it, It's like this guy, Charlie, I always go to him. I mention him all the time. It's like they raised the debt ceiling last year in June of last year, and back then the debt was 31 trillion, and in just 1 year we already did 4 trillion. So like sometimes I do believe the stuff that I hear about like hyperinflation versus deflation because it doesn't look like they're going to stop printing. We see it all the time.
Yeah, and so that's just a personal example. Now the government, if with hyperinflation and they print more money out there, then technically their debt is cheaper. So
it benefits.
So if it was 31 trillion, but now because of hyperinflation, it's like, well, it's not as bad because now it's actually worth less. The debt is worth less. Yeah, our dollar bill is worth less, but so is our debt, and it's fixed. So it's not bad. And they do it I feel like that could potentially happen because if they lower interest rates again to let's just say to close to what it was last time, that allows a lot of people to refinance at a lower interest rate and continue printing, shoot up inflation. And yeah, it's an interesting, that's hyperinflation, but deflation is the opposite where let's say, just say you make 100,000, now your income falls, to 50,000 due to, market pressures. And because, that's just what happens with deflation. Everything just goes boom down in cost by a lot. Yeah. We hit a recession, and then there's deflation.
Lose their houses, lose their jobs,
and people are willing to take that $50,000 job that used to be 100,000 because they still have bills to pay. They still have that mortgage, even though the mortgage is fixed. Yeah, that debt is still the same.
Well, we see that nowadays because in the 2020 to 2022, like engineers, all Facebook, Google, Microsoft, Amazon, all these big corporations were overhiring to the point that people were switching their jobs every other month because the opportunities were there. But now that there isn't, a lot of those people that used to have this engineering job and making maybe close to 200,000, they have to pay for their mortgage. And we see that they're working more on the service sector, which is either the food industry or in hotel or somewhere because they still have to pay for that. Yeah. And if you see here, this chart, look at that. We were hitting a point where we haven't hit in a really long time where people were quitting their jobs and switching, but we're no longer there. And we do see that. I don't know if you see Amazon is saying return back to the office, or else we're going to lay off, I think it said like 15,000 people because, it's a way for them to cut, they're preparing, they know like this stuff might happen. So they just don't want to have a huge overhead where they're going to have to cut when they least want to.
Yeah. So that's all important to understand, how the economy works and inflation.
But what I want to say is, look, all this stuff like negativity, it sells, because fear is like, oh my God, what's going to happen? So that's why Charlie always says, look, predictions, people have wild predictions. Like if you see here, this chart, these are like JP Morgan, Morgan Stanley, Wells Fargo, all these Bank of America, like Citigroup, Goldman Sachs. No one got the price correct, and they were 100% correct. And these are people that make millions of dollars. They have their that's what they do for a career, for a living. For us, we don't do that for a living. We have our side jobs, we do this and that. So if we think we know what's going to happen and they don't know, that's why there has to be a balance, because just because they hear stuff like this, it doesn't mean it's going to 100% happen too. We have to be honest, because since 2022 we were saying recession, and quote unquote, even though there are sectors that felt recession, like me, my film world definitely is in a recession.
Yeah.
But the market, or if you're the thing, okay. But also, who owns stocks? We're talking here about the stock market. So maybe you got laid off and you're like, what does it do with any of the stock market? This once again goes back to my beginning, what I said previously about owning stocks. This is the only way that you'll be able to either get yourself out of inflation or just help your money grow versus just having a mindset of a consumer.
Yeah, I think I still think hyperinflation is more
You
likely
really do
because
think so?
that's what's been going
Yeah.
on. It's gonna go on forever until someone comes in and says we're gonna stop spending, and
Well,
that's never gonna happen.
it actually, yeah, I was preparing for this one. Argentina did that. Argentina actually did do that, where he was promising Milei, the guy that won president last year or 2 years ago. I don't even know how long ago, but he recently, won presidency, and they were experiencing hyperinflation
Yeah.
and horrible their money. Like, you would see photos of how much it cost to do just basic goods was like ridiculous. But he's cut spending. He's cut government spending and other programs that were just printing money for no reason. And out of all of South America, if you see the stock here, Argentina since 2020 has been going up because they've been improving their economy. So like hyperinflation is going to happen because of government too much spending of the government. So if someone goes in there in the office and says, you know what, we need to cut down on our budget. We need to stop, spending all this money that isn't really going to benefit the people. We do have a chance of correcting this though. And we could experience a boom because like right now we're in a stage where this new tech of AI, and if it's true what they're saying of what this thing is possible, it can actually have like what we experienced in the 90s, a boom, where this new internet technology came about, which created so much opportunity there in the market. So I don't know. It doesn't mean this is guaranteed. It really depends on the government officials being, you know what, we need to cut. Just like you, like just because you're on credit card, that doesn't mean your life is ruined. You can start cutting back, figuring out ways to be smart about your finances. Maybe it won't take a month, but it'll take 5-6 years. Well, like me, eventually I was in $25,000 in $15,000 in the credit card debt. And it took 5 years to get out of that. And now I have a healthy savings, healthy investment, and I have a much more comfortable life. But it took sacrifice for 5-6 years. And I think we could do the same thing.
Yeah, I still feel it's so different because we can cut back on whatever we want, but like even if we raise taxes to 100%, it won't be enough to cover the debt that we have. So I think the only way is printing. I think it's just that's printing money, raising taxes.
But that's a good thing if you own a house. Isn't that good for you?
Hyperinflation, I'm not trying to come at it as a negative thing. If anything, if you're a homeowner, if you own stocks, it's the best thing in the world that can happen. Well, I don't want to say it's the best thing in the world, but
it benefits you.
Inflation in general. I mean, we saw it from 2020 to right now. The stock market has made amazing returns. Your house is probably double if you bought it in the last 10 years. It's double or even triple its value.
Way more.
So it's not going to be terrible for some people. And basically, it's not going to be terrible for people a little bit older, millennials and above.
People that own assets.
Yeah, which most Gen Z, most Gen Alpha, a lot of millennials do not own assets, whether it's real estate, stocks. Those are the two main ones, I guess. Gold, stuff like that. But I don't think they don't buy that stuff. That's more for older generations that usually buy that stuff.
Well, gold's going up a lot.
I know. So that's why I'm saying
maybe there is people that are our age that are buying gold. Maybe Costco was selling it 2 years ago.
Costco was selling it. Yeah. So I don't know. I just feel like there's a lot of stuff that could potentially happen. We don't know. We don't have a sphere that we can see everything that's going on in the world. I mean, like I said, like this is the revenue of the government, and it's just not enough. This is in trillions of dollars. Oh, like 4 trillion, 5.5 trillion, 4 trillion, 4 trillion, blah blah blah. Our debt is like in the 30s, you know, they're close to 30 trillion, you know. So it's
But if you compare us to the like, we're comparing ourselves to
yeah,
ourselves.
yeah, of
If
course.
we're comparing ourselves to even other
Argentina,
countries,
for example.
Europe, like the big ones, Europe, China, those big economies, like we're technically the best out of all of them. Whether it's technology, whether it's business, whether owning a house, starting a business, like out of all of them, we're the best. And I think sometimes if you see the stuff that we're going to talk about in the next podcast, I think we're gonna live. It's because we're entering a world that's gonna be so different in the next 10 to 20 years. And right now, we need to. This is such an important issue to solve, and I think there's a lot of smart people that are finally saying like, okay, we need to fix it. We need to start, changing our overall spending patterns. And people are voicing it with social media, like, where's the help government? Where's this and that? So I think there is going to be a change. It's just
Mhm.
gonna be sucky, because if it is true that we need to cut spending, that means people in government are going to lose their jobs.
Mhm.
There is going to be a transitional period, but I think we are going to solve this issue. So I used to, like 2 years ago, be like looking at all like Michael Burry type point of view of like, oh my god, the market's going to crash, housing's going to crash. Like, I don't know if you saw that this post by the Brew Market. They posted it about how 2 years ago Bloomberg was said 100%. And to be honest, this was the bottom of the market. If you bought almost any stock during that time, it's like doubled, So, and then we see constantly other stocks about even presidencies. Oh, I don't know if I have that one. Where if you look at even the people who are president, the stock always goes up. We always figure out a way. It I don't know. I'm more bullish on America figuring it out, especially because of the technology that we're introducing into the world. That just think about this. We caught a rocket with chopsticks. Like, which other country is doing stuff that we can never even imagine? So I don't know. I do think that we're going to figure out this issue. It's just going to take people just like you. When you go through your budgets, you're going to have to be like, you know what? I can't buy stuff no more. When you concentrate and fix our issues, I think it is. I think
Well,
it is.
the way I see it is like it's like you give a person that's terrible at debt, and then you give them like two cards. One of them is a credit card. The other card is a debit card that's endless, that continues printing. They're gonna continue getting in more debt. So, in my opinion, I don't think we're gonna solve our debt issues anytime soon. Um, because people, they don't really care. They don't vote for the person that's gonna lower debt, because no one's gonna lower debt, because no one even talks about that. No
Yeah.
one, not Trump, not Kamala, not Obama. Every president, Republican or Democrat, especially in the last. Here's the thing though, that after 2008, that's was supposed to be a depression. That was supposed to be a reset so that we could restart and start all over. Like, hey, like a bankruptcy almost. Like, hey, we had all these crazy debts, this, with the houses and all that stuff, the banks, the committing fraud, all of that. We were supposed to be a reset. And I'm not blaming it on Obama. I'm not blaming it on any president. But what happened, not one single banker went to jail. That destroyed families. That my own father lost a house, and many other people lost houses. That
Mhm.
got screwed over by a lot of scams, legal scams that were happening. And what was supposed to happen? People were supposed to go to jail. Things were supposed to change. Nothing changed. No one went to jail except for like one random guy. And what happened? Boom, printing, printing, printing. These banks got fat checks, fat bonuses. They kept going. If they opened up
They're
another
probably
bank,
still working.
yeah, many of them opened up other banks and other names, and they're still functioning and they're just fine.
Yeah.
So I think that's the issue, is that the only way we fix issues is just print money. And that article that says 100% recession, I'm pretty sure if there was no money printing, we would have been in a depression.
No, if there was no AI.
Oh yeah, if there was no
Yeah,
AI, yeah, yeah,
literally a month
AI saved us.
later. Yeah, if there was no AI, because But see, who we've
Yeah.
literally, even them. That's what I mean. We no one predicted AI to come. That's the thing with this. We were like, if you see the stock market, we were like, even housing started to go dip down a little bit. Jobs started getting fired a lot, but then a new technology comes called AI, and that just not only did it fuel like the stock market, but just look at the articles. Amazon is getting to nuclear. Google's getting to nuclear. Microsoft is getting to nuclear. Even the Department of Energy is opening up funding to nuclear, which is going to help produce a lot of energy, which will make the energy costs go down.
But all those are dollar signs. And where does that money come from? Print out of thin air. A lot of this is coming from thin air. Through subsidies, through credits, through government subsidies. Like they subsidize Tesla and Amazon and all that. That's where like it's great for corporations, but the average person's gonna get screwed over because houses are only gonna cost more. That's the thing. I don't know. I don't see houses going back to an affordable level.
No, houses never. It's like cars. They never go back into the $20,000 range.
And it's not like our income's gonna catch up that much. And yeah, AI is great, which we'll do a segment on AI right now. But I think it's just a crazy time we're living in because there's just so much things with AI, with robotics, with new presidents, and it's like, are we gonna ever let the economy just like do its thing and be a free free market ever? It's never gonna let do its thing. We're just gonna print quantitative easing, quantitative tightening.
Would riot if that happened.
Exactly. So it's like I don't think they'll ever allow 2008 ever again.
No,
they just turn on the money printers.
Well, yeah, weren't the banks crashing like a year ago?
Yeah.
And everyone was stating the same thing. And
here's the crazy thing is your max deposit that's insured is $250,000. They increase it to unlimited. Why? And that's another thing. See, the Federal Reserve, they basically gave them all this crazy money they can use and borrow. So more debt.
So they don't crash.
Use this money to fuel whatever you need to save your bank. I can only imagine the conversations behind the scenes and how many banks were about to shut down or close. But because the Federal Reserve, again, Jerome Powell, came and saved the day, not the president. Jerome Powell is the most powerful man in the world. Like literally, it's crazy because let's see if I can find the picture. We'll put it up here. We met him. I personally talked to him. My dad talked to him. He shared a story about a family that we serve here at the nonprofit. And he was very intrigued about everything that we do. And he was a very nice, genuine, humble person. But this was right before he got famous, right before even people knew who he was. I didn't even know who he was. Like, was this
2018 or 2017?
2017, 16, I don't know. It was right when Trump got elected. It was right there. So I think a year 16, or two 17. After. I think 17 or 18. Yeah. So his first term. So I didn't even know who he was. It's like, who's Jerome Powell? And that's how like when we met him, it wasn't that much of a big deal. I mean, it was because it's the Federal Reserve. We had to go through so much security and stuff. It was so cool. But still, it wasn't like today. You meet Jerome Powell, you're just like, damn, he knows what's gonna happen. Should I buy stocks on this one? Should I not? Should I sell my house? No.
Yeah.
But
I wonder if you would have asked him, what do you think about crypto?
Oh, back then, yeah. So that was before the huge bull run. But yeah, I don't know. I definitely am not gonna be. I'm not saying this to be negative on the on the economy. You know, the U.S. will always prevail. I'm not gonna say it's all doom and gloom, but I will say like. The fact that it already happened the last 5 years should be enough for you to go out there and buy some stocks.
Yeah.
Buy some assets.
I think more than anything, that's what I hear from what you're saying. It's just like, if we really are going to hit inflation, then get out of debt and own a lot of stocks.
Yes, please get out of debt.
Don't go into risky stocks. You could just go S&P 500, open a Roth IRA, with your 401k. Keep it simple. You don't want to lose all your money, and throw it all in crypto. Be smart, because we're not experts. We're just normal people. Let the what are they called? ETF markets or the ETF portfolios. ETF, right?
ETFs, mutual funds,
Let them do the hard work. Just invest into that because all you need to do is compound your money. And let them do the hard work of figuring out which company is going to do the best. Let them do that. Yeah,
that's the most important thing is to own assets.
Yeah.
So even if there's a hyperinflation, and I know it sounds oh my God, it sounds so bad, but if you own a lot of assets and you own stocks, real estate, you'll be just fine.
Yeah.
But if you have a lot of debt right now, it's best to pay it off. Don't invest into stocks making a 10, even a 20% return, which is amazing when you have a credit card that's 30% interest.
Yeah.
The math ain't mathing.
Yeah, it's like in 2020, 2022, a lot of people were saying the stock market was going to crash, and But I was still invested into the stock market.
And it did crash.
It did crash, but I benefited because I still dollar cost average every month, a percentage of my income, whether there's a crash or not, because I'm thinking, 20, 30, 50 years of compounding. So these little dips that happen are going to be small in the long scale. So find a percentage that you can invest depending on how much money you're making, that you can just put it into the stock market, and then watch 5, 6, 7 years of compounding. You'll be shocked at how much more money is in your stock portfolio than it is in your savings.
Yeah, so that's all you're gonna do. So that's enough to like wrap up this conversation. The most important thing is that you can invest into assets regardless of what happens, who wins the presidency. Yeah, there's a little bit dips here and there, but overall you zoom out, the stock market performs well, real estate keeps going up in value. We don't know what will happen with crypto, how much more it'll be adopted, or if it'll just be Bitcoin. But that's also an alternative, and always keep it to a small percentage of your portfolio. That's what we always say is stick to the less risky, more traditional, more conservative type of investments, which is your stock market and real estate, basically.
Yeah, focus more on increasing your skills, getting out of debt,
Yeah, that's the most important thing. Because if you don't, then you're just going to be like the U.S. government. But the U.S. government, they have a lot of debt, but they also have a lot of money to print. Yeah. You don't have a money printing machine. And if you do, hit us up. We would like to know more information about that.
No, the government would kill him.
Yeah.
Get rid of him, I mean.
I know. So unless you're like the government that can print money, then screw it. Just get as much debt as you can. Get all the store. When you get to the store and TJ Maxx tells you, would you like to open a credit card for 10% off your purchase of $10, which is $1 off? Yes, I'll do it. So yeah, that's all we leave you with. What will happen, we really don't know. But these are just conversations to spark interest so you can understand what's going on in the economy and do your own research too. And all these charts that we show, there's people that you can follow. There's all these pages and people and podcasts and even government websites. From the Federal Reserve to the FDIC to etc. So really inform yourselves and don't be an uninformed voter. Don't be an uninformed American citizen. We want to make sure that when we vote, that when we make financial decisions, we make it because we are informed when it comes to our economy. And also, the elections are coming up. It's October already.
2 weeks.
It's going to be in November 4th. I believe that's the election date, November 4th. So it's coming up. So whenever you watch this, maybe we already know who's president. Maybe we don't, but...
Did you know what happened the last 2 elections when Trump won in 2016 and Biden won in 2020 to the stock market?
It went up or nothing? Both
went up a lot, both. So it doesn't even matter if it's red or blue. The market, I think both of them went up roughly 30%.
I think it's because now they have an idea, okay, whether it's the left or right, okay, it's settled. There's a decision. There's someone that's going to be in office. Now we know. It's all good. Okay. But yeah, we'll see you guys in the next episode. Take care.